we're getting ready for our venture capital dealmaker panel. Let's start to welcome them to the stage. And everybody can hear in the back now, right? Okay, good. First, Chris Evdemon is a partner in San Francisco for Beijing-based Innovation Works, China's renowned early-stage investment fund and incubator that Kai-Fu established in 2009. Chris has spent the better part of the past decade working on entrepreneurial and angel investment projects in China, Singapore, and now the U.S. Secondly, Eric Hsia, from venture partner and advisor at TransLink Capital and managing director of angel fund Eternal Capital. Eric's venture-focused career includes founding partner roles at U.S. Greater China Cross-Border Fund, SVB Capital, and Softbank Asia Infrastructure Fund, which was the partnership between Softbank and Cisco that focused on deals in Asia and the U.S. Eric Kim is a co-founder and managing partner of Goodwater Capital in the Bay Area. Before co-founding the early venture fund in 2014, he was a director at Maverick Capital. He's a board observer of Korean mobile messaging service Kakao, which we've been hearing about tonight, which had a blockbuster IPO in Korea last November. He's a board director advisor for 4 other tech startups, including Korean e-commerce leader Coupon. So I really do think we needed to put the K before the Chindia in this program. Because Korea is really making, major impact, major influence now in the tech world, in the early stage tech and mobile messaging world. Hany Nada, who's here from GGV Capital, U.S.-China venture firm GGV Capital, which has been on the forefront of a lot of very successful investments, including Alibaba. Hany is in Shanghai and Beijing at least once a quarter. A lot of frequent flyer miles. They are working closely with the China team and their portfolio companies. Hany, thank you for being here. Teddy Himler, an associate at Softbank Capital, another firm that has been deeply involved with Alibaba. Teddy is also involved with Softbank China and India Holdings. He's based here in the San Francisco Bay Area. Before joining Softbank in 2013, Softbank has been ramping up here in the Valley, by the way. And for some reason, we seem to have lost the lights in the back. You guys are in the dark in the back. Teddy, before joining Softbank in 2013, he was an investment banking analyst in the TMT sector at Goldman Sachs in New York. He oversees investments in such emerging markets as the Philippines and Indonesia. David Yuan, who's here from managing director and partner at Redpoint Ventures and head of Shanghai-based Redpoint China since launching its presence in 2005. That's really early on. He's a board member or observer at several Chinese tech companies, including iDreamSky, which went public on NASDAQ in 2014, and NYSE listed Chiho 360. David led Redpoint's investment in CGen Media, which was acquired by Forbes Media in 2008. I really welcome David here tonight because I know Redpoint's been having its LP meeting here this week. So thank you, David, for joining us. And he flew in from Shanghai for this event. Okay. Is everybody mic'd up? Yes? Do some of you have the wireless? The wireless? Okay. Okay. So this panel illustrates what's happening, both the China, and India coming into the U.S. and they're investing in inbound and also outbound. A lot of activity in China and India and other emerging markets, like we heard, Indonesia, Philippines, Korea. So why don't we just go down the line and get a quick summary of what they think is their firm's strategy and why it's working and why they're focused on Asia, and a couple of examples of what's working for them and where they see room for improvement. Okay, let's start with Eric.
Sure.
We'll go down the line.
I'm probably the newest fund manager here. I started Goodwater Capital with my partner Hsia. In 2014, we raised our inaugural fund of $130 million in the fall of last year.
He was with Kleiner before, right?
Yeah, QS was with Kleiner for several years. I was with Maverick Capital, a global investment firm, for 7 years as well.
Okay.
And so we both specialize in consumer technology. And when we set up the firm and we talked with our LP base, we were very intentional about emphasizing a global perspective with regards to our investment thesis and how we invested. We think the world has shrunk today. If you look at kind of what the Google Play Store with iTunes has done with regards to global distribution, if you're a startup today in Silicon Valley or a global player out of China, the borders are being erased every single day more and more and more. So though probably 70% of our capital is actually invested here in the US, primarily in Silicon Valley, we think it's very, very important to understand what's going on in China, Korea, Japan, Southeast Asia, other parts of the world to make an investment in Silicon Valley. We don't think you can be isolated anymore or specialist just in one region. We think it's very, very important to understand what monetization is happening, what practices are going on in Asia to make a bet here in Silicon Valley, for example. It's just very important to have a global perspective these days. So that is kind of an overarching kind of position of how we will be investing going forward.
Okay, Hany?
So not to sound flip, everything is working. It is amazing to me to see the level of success that many portfolio, not just GGB portfolio companies are having, but many companies are having in the landscape. I mean, obviously we're in a rising tide season, and many of the companies are doing well. Now, where are we putting our dollars? Where do we think there's exceptional growth? Where do we think there's going to be sustained, differentiated growth? I think in Asia and even in the US, e-commerce obviously has been a big winner, especially in Asia. And you're starting to see some of that here in the US as well, where because of the lack of physical infrastructure in China for so long for retailing, e-commerce companies in China are doing very, very well, especially the focused ones going after very specific verticals. The second, obviously, market that's doing well is the O2O market in China. The services that we all take for granted in the U.S. that are just starting to come out in China are working, whether it's delivery, financial services, cars. Those are all doing very well. By and large, I think we haven't had a single write-off in our portfolio in 5 years. That's unprecedented for us in our 15-year history. So there's obviously a lot of money flowing into the system, so companies are raising a lot of capital. And also, I think the environment, the business environment for many of our companies is also very strong. So what's working? Just about everything. For
how long?
You're not paying me. You're not paying me enough for the answer to that.
Okay, we'll get back to you on that. Teddy.
Yeah. Thanks. So, I work for Softbank China India Holdings, an affiliated venture arm of Softbank Corp. In Japan. I think many of you may be familiar with us. We're a large Japanese tech and telecom conglomerate. And my focus is on Indonesia and the Philippines. Why those two areas? I think the secular trends and the large populations speak to themselves in the region. But we had tried kind of a pan-Asia play in a previous fund, and we find it particularly hard to cover all the regions adequately. I think and the focus on Indonesia and the Philippines really allows us to understand the local market. I mean, you heard from Dave Morin earlier about how local knowledge and doing your research in a market, adapting your product to the market is crucial for the entrepreneur. Well, it's also crucial for the investor. So that focus that we have on I think those two areas, really it allows us to get more comfortable with the contours of that region. So we've selected those regions, and we're hopeful. So that's geography, and then I think on sector, Hany brought up a good point on some of the sectors he listed there. I think are unique. E-commerce. You mentioned cars. You mentioned financial services. He didn't mention search, right? I think one of the interesting things that we found when we're investing in local entrepreneurs, they're not really going after these global ideas, and I think Rebecca and I actually sometimes we differ on this point. They're going after these ideas that are regionally defensible, that are local, and they sometimes, have a large offline component to them: e-commerce, transportation services, even financial services, because you need to integrate with banks. So that's our general strategy: looking for regionally defensible businesses in a focused area.
Okay, good. Eric?
Sure. So
TransLink's been behind some big successes recently too.
Sure, and I think the evolution of TransLink is reflects on how the market's evolved. So when TransLink started 8 years ago, the team came together to found a venture capital firm that could link the best of U.S. Silicon Valley startups to Asia. In particular, we had partners from that could cover Greater China, Korea, and Japan. And so that was the initial focus. What we've seen over time, and the thesis there was that a lot of American technology companies, they wanted to make their market here first. That was their primary market. And then once they had gotten some traction, then they would look at going to Asia, and that's where we could step in as a firm. So you would see us doing later stage deals, Series B, Series C. You fast forward to nowadays, if you look at our funds, we're going earlier and earlier. And why is that? Is that because we decided we didn't want to be in a B and a C, and that's not the case at all. It's because the companies that we're looking at in the spaces we find interesting, they want to be in those international markets from day one. So whether that was Quixie, which you heard from earlier, gaming companies like Camcord that we invested in, their initial customer base, their initial markets that they want to succeed in are not the US market. They're in Japan, they may be in China, they may be in Korea for a variety of reasons. And what we sit there looking at is how do we help them figure out where they should be first and how they can best execute in those markets.
Okay. Chris?
Yeah. Hi everyone. So Innovation Works is a little bit different from our other panelists over here in the sense that we are completely a China-based venture capital firm with about $500 million under management, truly early stage minded, a little bit like Andreessen Horowitz and Google Ventures in the sense that we have a lot more non-investment professionals rather than investment professionals in our team. We have large co-working spaces both in Beijing and in Shanghai. But why am I here today? It's because we also, after several years of investment in China, started an experimental US investment program. So we're a little bit different in the sense that all of these years, for the last 10, 15 years, we have several people here, like Hany or Redpoint, right? They started from Silicon Valley and they started the US practice. We're actually one of the first few cases of the reverse happening. So we're a China-based VC. Money under management split 95% for China and only 5% for the US, but little by little starting to also make some early stage, seed stage and Series A type of investments in the US. Now, why do we do that? We do that because whereas in a lot of the consumer, especially consumer mobile facing areas that also Hany mentioned before, China has actually to a large extent leapfrogged the US market, both in terms of innovation, in terms of the product quality, in terms of user base, in terms of monetization, business models, whichever way you want to look at it. There are some sectors in China that are still, I should say, underserved or overlooked, or where, for at least for now, Silicon Valley is still ahead, and it makes sense for us to put some money to work in these sectors, but they are very, very few and narrow, at least in our opinion. So over here, the money that we put to work is purely on three sectors alone, 3.5 maybe. We do a lot of developer tools. The idea behind that is that China has the largest, it doesn't only has the largest consumer base, it also has the largest developer community in the world, and very rapidly expanding and improving also. But a lot of the tools that a lot of their American counterparts are having at their disposal over here are not readily available in China. There's not that many startups that are actually exist to service their fellow developers in China. So we are doing things here like data science as a service, machine learning as a service, or Camper, which is actually a co-investment we have with TransLink that is servicing mobile game developers and mobile game developer communities. China is huge and #1 in the world, but there's not that many companies that are creating such kind of tools over there. We do online education over here because China is only starting right now to expand its online education. The majority of the Chinese startups that are doing online education are just focusing on the university entrance examinations and also on the English language. learning, but online education is so much broader and so much more interesting, so it makes sense to invest in some companies that are creating great content here, because content can travel. And for the previous sector that I mentioned, developer tools, the one other interesting thing is this is the only sector I know of that doesn't need any localization to go from one country, to go from one market to the other. And the last but not least, and I think where we're going to be putting almost half of our money in the US, because it's also a cross-border play, is actually the Internet of Things, where we only are at the tip of the iceberg at the moment. But American founders, they have great ideas about new devices in terms of design, and a lot of innovation here in terms of design. A lot of interesting ideas also about how to use the data and do actionable insights out of these devices. But the one problem they have no clue how to manufacture. As a Chinese VC, if we build our resource base correctly, and very few VCs at the moment in China have this kind of resources actually, we can help them a lot de-risk, especially in the first year or two when they actually go to build their devices in the factories in Dongguan and so on. So we do just these things alone, because in any other sector, if you ask me personally, I don't really think that a lot of American startups stand much of a chance to compete in the domestic China market, unless there are very, very specific opportunities. I think our previous speaker at Quixi, Quixi is doing a great job with deep search, but the only reason they have an opportunity to work with Alibaba is because Baidu has acquired 91.com, and Tencent is doing its own search, and Alibaba was left behind. They were really trying to find somebody to work with, and they couldn't find any other domestic player, or they couldn't acquire the domestic player that they wanted, and they ended up going. Uber is another great example, right? So Alibaba and Tencent have their own hundreds of millions of dollars of investments in the O2O space around that particular model. Baidu was left out. They couldn't find the domestic player to back, so they put in a lot of money in Uber. But if that wasn't the case, neither Uber, nor Quixi, nor LinkedIn, nor Evernote, nor any of the other companies would really be able to compete in the Chinese market. So I think it's very, very narrow. There's definitely a lot more cross-border opportunities than 5 years ago, or certainly more than 10 years ago, but it's still, you have to be very, very focused in specific segments.
Good.
So,
Thanks, Chris.
Redpoint has been investing in China since the early 2000s, and in 2004 we established our presence. We have 2 offices now, one in Beijing, one in Shanghai. We have invested in close to 40 companies in China, and we had Fortune and invested in companies like 360, like iPhone Sky, like Doma. So we looked at China, and we kind of developed this view that, in terms for Chinese technology and innovation companies, it really went through 3 phases. The phase 1 is probably before 2008 is what we call copy to China. So during that period of time, Chinese companies are basically were copying successful innovation and business model from developed in elsewhere, particularly in the United States, copy those models in China. And at the same time, they are competing with multinational companies that was operating in China. For example, Google was in China, Yahoo was in China, and you have Baidu were competing against Google, Sina and Sohu were competing with against Yahoo, and same thing with eBay competing with eachnet. And then that's the first phase, and then I think sometime between 2008 to 2014, gradually the domestic homegrown company gradually they won battles in each sectors. So in the search area, Google was forced out, and you have Baidu became the dominant search player. Same thing with e-commerce. Alibaba became the dominant e-commerce player. So at the end, you have developed this what I call self-sufficient internet ecosystem. And China is probably the only country besides the United States that has now today a complete self-sufficient ecosystem in the internet industry. I think we're very interesting to start to see what I call the phase 3, which is the Chinese technology company are now start to venturing outside of China, start to pursuing their global ambition. And I think, for example, in the area of mobile internet, China has now the largest mobile population, mobile internet population in the world, over 500 million mobile internet users, and Chinese company have enough time to and enough opportunity to innovate, improve, and perfect their business model and innovations. And they start to venturing out to emerging markets first. And what they found is that when it comes to mobile internet, there are really 3 markets: one in the US, one in China, and the third, the rest of the world. And when the Chinese mobile internet company found that when they went into emerging markets, they really see the technology, the business model they developed back home are very much applicable in those emerging markets, and maybe they are more competitive in those emerging markets than companies from the United States. So we start to see that, and this is what I call the phase 3, which is going global. And if you think China, the last 30 years have been the manufacturing, factory of the world for physical goods. I think there's a possibility that in the next 30 years, Chinese technology companies are going to be gradually become the kind of factory for digital products and digital services. We have a portfolio in our company, in our firm. We funded this company sometime in May last year. We know the entrepreneur for a very long time. He was a senior executive at Chihu, and the company I was on the board for many years. And last May, he decided to build a company in the mobile internet space that is exclusively focusing on opportunities outside of China. In 2 months, he developed his product. He launched his product in Google Play in the beginning of July. And by December, the end of December, in 6 months, he has acquired over 90 million activated users with 30 million daily active, 70 million monthly active.
What company is that?
The company is called APUS, APUS.
Oh, sure. Yeah. I
it
just
is
heard
now
about them for Forbes too. Yeah.
the fastest growing.
I think we have some people here from APUS, don't we?
I think the CEO,
Yeah.
some people are
The
from.
CEO and their team were here,
Yeah.
or are still here.
So
Yeah.
it is very interesting if you look at data. The end of last year, it became number 10, the top 10 largest mobile apps by download, just in short period of 5 months. And it's also very interesting if you look at that list, the top 10 global apps. Those are super apps by downloads. 3 of them are from China, actually. You have APUS, Baidu, Kingmaster, and 1 from Japan, Line. And then the rest are, Facebook has 4, and then you have Skype and maybe another one, right? So you start to see, at least in the mobile internet space, Chinese companies are venturing out and pursuing their global ambition. So we're going to see more and more of those examples.
So with the mobile markets being so large in Asia, and also we were talking earlier about Dave's comment about he thinks basically innovation is happening first in Asia. Do you think that we're already at that stage, particularly with the mobile internet? And are there other areas that we're going to see innovation happening first in Asia?
Anyone?
Hany, do you want to go?
Sure. So look, we've been investing in China since 2000. I think our first investment was in November of 2000. And it's a different kind of innovation. Most Silicon Valley entrepreneurs, VCs, investors think of innovation as technical innovation, where you come up with something hard formula, hard science to solve a problem. Most of the innovation that I've seen out of China has been really much more use case innovation and business model innovation. I think in terms of monetization strategies, China is well ahead of the U.S., 10 years plus ahead of the U.S. in terms of how to segment, segment your audience and monetize that audience accordingly. U.S. companies are still struggling to do that. I mean, Pandora is a perfect example in the U.S. on one side, and then you got Tencent on the other side. How do you monetize those users? So I've seen innovation in China for a long time. I think the expansion, the global expansion that you're seeing many Chinese companies doing, frankly, is just as a result of these companies getting very big and very large. It'll be interesting to see how, my guess is the initial steps are going to be filled with traps, but the ones that continue to invest and expand globally, I think are going to do very, very well. My guess is the first and second inning of these global expansions are going to be much more difficult than everybody thinks. The same way for U.S. companies trying to go into China.
On that point, I fully agree. And I think actually we had the case from Pat before. This is a great example. The reason why Pat is successful at the moment in Indonesia, besides any other product characteristic, is actually not reflecting the success of Pat, but rather the failure at the moment of the Chinese companies that have tried to capture the market. And the failure is mostly down, for me, it's down to talent at the senior executive level. So I think the one big challenge for Chinese companies is going to be who is going to lead their internationalization. And that's not going to be easy to solve. They will eventually, but it's going to take some time before they find the right people to lead the charge. And I think also the fate of Baidu, Alibaba, and Tencent here in the US market and what they're doing with their investments and who is leading them also is a very good example. They're so different between the three companies about what kind of teams and what kind of people they have in place over here in the US. I'm not going to say anything more. That's dangerous. But I think it's a good case study. So I think that that's going to be the biggest challenge for internationalization of the Chinese companies. And I agree with Hany. It's going to take a while before they build really good quality, top quality actually, teams in all these various markets they want to go to.
But I think returnees are going to play a big role in that, and you've already seen that with Victor Koo at Youku, Bob Kim at Coupang. You know, a number of entrepreneurs who have experienced the U.S., been educated here, even done startups here, going back to Asian regions and then helping them think about internationalization. So now you have the ideas, because I agree to your first question, you know, Asia is representing kind of a peek into the future for us here in the U.S. You think about social networking, gaming, e-commerce. The latest innovations are all happening in China, Korea, and Japan right now. Now they have the cash, too. Most of the cash, the dry powder, is actually sitting in Asia, not here in the U.S. Even though U.S. firms have more cash, 67 to 70% of it sitting overseas in foreign subsidiaries. And then the third piece is talent. So you think about all the returnees going back to Asia now. It's not, the dream is not to come here, experience the U.S. and then stay here. It's to come here, experience the U.S. and then go back to your home market and help kind of lead the next innovation and great wave of startups there as well. Obviously, there's a lot of homegrown entrepreneurs as well doing very well too.
But the interesting thing is kind of a reverse exodus happening. Many of the successful entrepreneurs in China are buying homes and moving their families to Palo Alto. That can also have an impact on how these companies expand internationally.
And I think in this cycle, cash is a tremendous competitive asset for the Asian companies because they have that cash. If you look at the Chinese companies that have come here to the Valley and made investments in a whole series of companies, what they've done and been part of this, you know, economic revival since the financial downturn is that valuations have gone up. And by taking these stakes in companies they think are very interesting, that have broad applicability to the businesses they want to build, they've also raised the price for any U.S. company that's missed the boat on something and wants to catch up. And that's a competitive weapon that you can use in the market.
Sure. Yeah, I think you know there are. I think your question was moving. What type of Chinese companies are going to move abroad, and it also I think is a matter of sector as well. So, some sectors are more transplantable than others, like I was kind of alluding to earlier. So, I think China's, recently has shown a great prowess in hardware. You had Hany here, but DJI and the Shenzhen ecosystem and all the companies that are coming out of there are showing, I think, technical innovation. And then, what about a company like Hany, right, which began originally in China? And I think, one of the points earlier was that there's a huge developer base in China. So it's not exactly, it's not a coincidence that you have this, this large company that creates developer tools and analytics to be first started in China. That's where the problem is, and now that company has moved abroad. So has drones. And then, one of the other things I think that is interesting here is, how we define innovation. It's probably one of the hardest words to define, right? So, are we innovating in Silicon Valley, or are they innovating there? So, is direct investing in M&A, is that a real innovation? And I think to an extent it is, insofar as you're learning from companies abroad, you're actually helping them tweak their business models after investment. Look at the Alibaba investment in Quixie. They're giving them a whole new market to move into. So, it depends kind of how you define really the word innovation.
Yeah, and you're certainly seeing a lot of Chinese companies coming into the U.S. market and doing acquisitions and investments here. Chris, go ahead.
Add a very quick point. I totally agree that it is completely sector specific. The direction from China to the U.S. For years now, games is the #1 space where Chinese game developers that's been coming here for a very, very long time. Two years ago, I think I was sitting in a breakfast organized by the mayor of San Francisco and his entourage in Beijing, and he had invited people who were interested, Chinese companies who were interested to bring their business to the Bay Area, and it was Baidu, Alibaba, Tencent, and 7 gaming companies. That was 2 years ago. But this year at CES, just a couple of weeks ago, in the space where all the startups are hosting their devices, 25 to 30% of the exhibiting companies were Chinese. So the two sectors for sure are mobile games is the one for sure is continuing. The other one is connected devices because of the advanced companies in China have manufacturing at home. So these are the two first sectors for sure.
So as these Chinese companies get stronger and stronger and they go global now, is this going to make it a lot harder for the U.S. companies to get into some of these markets? And we're seeing the same trend happening in India now too. So is this going to make it a lot harder for the U.S. companies to get into these markets, Asia's emerging markets? I mean, it's always been difficult, right? There's been very few successes. Is it going to be more challenging going forward?
Yeah, there's actually an interesting, I don't know if there's this book, I think I'd spoken to you about it, by Sarah Lacey. I think it's an odd title, but Crazy, Brilliant, Cocky. In a minute, she says, the most successful U.S. company to go abroad really has been KFC, but outside of chicken, there really hasn't been much success in U.S. tech companies going abroad. I don't know how I feel about that. I mean, I don't think it's entirely true. I think Google, Facebook, certainly, a lot of the enterprise software guys all have done extremely well abroad. But again, I think it's really sectors that are going to be defended regionally. I mean, it's going to be really hard for someone to try to get into the e-commerce sector and a U.S. company to get into the e-commerce sector in China. That's the easiest example, but there are a ton of examples down the line.
Well, I think it's a structural advantage that Asian companies have right now versus U.S. companies to compete in their local markets. U.S. companies are still worried about profits, cash flow yield with regards to their valuations. Asian companies, particularly Chinese companies, they care about growth, top-line metrics. Profitability is a second thought right now. Growth is being rewarded. And so in that dynamic, plus the cash balances that they have, it makes it almost impossible for U.S. companies to compete in that foreign market. So I think there's just a basic, in this current market, who knows if it changes, a basic structural advantage that that domestic companies in China have.
So we've invested at GGV over 140 companies. Half of them are in China, the other half are here. At every single one of our companies, our first thing is we can help you get access to China. We can help you get into China. But it's been very difficult, frankly. And almost the majority of the companies we invest in that have aspirations to go international, they tend to go international, and China is always a dark spot. I think people confuse the political barriers as the only barriers. I think there's a lot of cultural barriers as well. I'm not sure how well Facebook would do in China, even if it was allowed to go to China. Just because the culture, how they communicate, how they think, what's important, what's not important. Well, why Tencent with WeChat or QQ or YY is much more applicable to a social networking environment in China than it is in the US. And so I think a lot of people take that cultural difference for granted because they feel like American culture rules all, and I think that arrogance has led to this big black hole around tech companies getting into the US and China.
There are some, and we have a portfolio company, Criteo. Maybe some of you may know it. It's whenever you search shoes on the internet, they follow you around with retargeting ads. Those guys have actually created a massive global business in retargeting, and they have offices all over the world. They've been extremely helpful to SoftBank in Japan, Yahoo Japan specifically. That I think is a sector, advertising, right, and Google too, that has taken the world over and doesn't require the adaptation as much to the local contours, cultures, languages, etc.
Okay, so we have a panel of 6 venture capitalists here. I want to ask each one of them, would you invest in a U.S. tech company that doesn't have an Asia strategy? Eric, you're smiling there on the end.
Again, I think it depends on what they're doing.
Depends on what they're doing. So can you be more specific?
Sure. So there's a huge difference between, let's say, a gaming company where Asia has, if it's not part of their day one strategy, then it's probably, you would ask the question, why? And unless I learned something incredibly insightful as to why, I probably wouldn't pay much attention. Now, then you get surprises. So for example, I invested in a company called Misfit that makes the Shine and activity tracker. That, you would imagine, a $100, $150 device would, the initial market, when we thought about it, was the US market. So we said, how can we help this company? We can help them scale, because Silicon Valley companies, startups in particular, are good at making one device, 10 devices, maybe 100. When you get to 1,000, they struggle. When you get to 10,000, it's really a big jump. And you get to 100,000, everything breaks. So we said we can really help in that area. But then we said, well, let's see how this device will play in an Asian market. And we looked at the 3 Asian markets as we can help in. And we said, let's bring this to China and see what happens. So last Christmas, around October, we decided, let's bring this product to China. We helped them. We identified their partners. We got the product into the channel by the holiday season. And fast forward to today, China is their 2nd largest market. Totally unexpected. A variety of reasons that we've learned about why that's the case, and more that we're still learning about why. But it was unexpected. So there'll be things that you'll run into that you just won't foresee, and there's some learnings that we've gotten from that and what that means for other consumer products, what price points play well in China, how do you sell in China. And that's very different from India. I mean, Xiaomi's in India, they're going to India now. They've had some success in selling their product, and they have a global distribution strategy trying to sell online. And they've had some success, but at the tens of thousands of units in India. And I think what they'll learn, and you're starting to see, is because they've just decided with Airtel they're going to have to put product into stores, is that Indian consumers at their price points will want to touch and feel their product. It's very similar in Russia. Russian consumers will not buy consumer electronics unless they can touch and feel and see it first, even if it's at $100. There's no price point, and you got to get very low before they'll buy something online, sight unseen. So it just depends.
Okay. Eric?
Well, I was just laughing because I've been an entrepreneur investor for 12 years or so now, and my answer to that question has changed significantly over the past 12 years. So 12 years ago, it wouldn't have been a concern. Do you have an Asia strategy? But now, absolutely. Do you have an Asia strategy with regards to funding? Because your next check will likely come from Asia, not from U.S. investors. And then secondly, your growth strategy beyond the U.S. market has to involve Asia in some way. So those are 2 critical things we look for with all our investments, whether they're here in Silicon Valley or any other part of the world. So I was just chuckling because that has, for me personally, has changed significantly over the past 12 years.
Yeah, yeah. David, what about you? Redpoint's been investing a long period of time.
So we
Both China and U.S.
Yeah. So we invest in both China and U.S. So that gives us a kind of a global perspective when we look at investment in the U.S. as well as in China. So I think we also I tend to agree with the GGV's view that it's really hard for us to help our U.S. portfolio to look at their China and market entry strategy because the market is so different, and we tried in consumer space as well as in enterprise space, and I don't think we have a good formula to do it. But I do think that Asia is going to become very important for U.S.-based companies. For reasons that Eric mentioned. I think if you look at Tencent, Alibaba, they're becoming more and more aggressive in deploying capital in the U.S. And we have 3 portfolio companies in the U.S. have received very large amount of investment in the last 12 months. 2 from Alibaba, 1 from Tencent, in the order of 30 to 50 million US dollars. And increasingly they are going to have an effect, significant effect in the venture funding space here in the US. So company here in the US, they do need to have a strategy for attracting growth fundings from Asia, from that perspective.
Yeah, by the way, we're going to be talking about this topic at our San Francisco event, March 25th. So you'll be hearing more about that soon. Chris, did you want to add?
Well, yeah, for us it's a little bit different. Again, I think I would answer your question by saying this is sector-specific and stage-specific. I think when you're talking to first-time entrepreneurs here at the seed stage, sometimes it's a little bit too much to ask them to have a very clearly laid out Asia strategy. And if they're building something that is a little bit avant-garde, and that's the kind of spaces we are investing in. I mean, we have an investment in a company called Compology that is putting sensors in dumpsters. They are trying to disrupt the waste management business. Now, why would I ask them to have a strategy for China or anywhere else in the world? They have such a big, challenge ahead of them just to win the market in the U.S. alone. We have an opinion ourselves, and that's why we're investing about their prospects, in the Chinese market or anywhere else. But I think it's too much to ask of such a company. Or we put in money recently together with Coastline, a machine learning as a service company. This has not been done before, not in the U.S., let alone anywhere else in Asia. Obviously, we think we can bring their technology to the Chinese developer community at some point, but we wouldn't ask that they know how. This is actually part of the value add that we would bring to the table for them when the right time comes. So I would answer yes to your question, actually.
So I want to clarify something, because I think a lot of U.S. companies tend to ignore China and say, you know what, we can't do it, it's too hard, we're just going to ignore it. But there are models that work. There are lots of examples of how you go into China as a technology company, or even just as a company, and make it successful. The 2 wildest and biggest examples, if you think about Kohler, the plumbing company, China is a fantastic market, very profitable market for them. The other one that's been extremely successful in China, a tech company here in the Bay Area, is Yahoo. Very, very clear example of how it partnered with someone and created a lot of value for its shareholders. So those are good examples of how companies can be successful in China. Yeah. And that's troubling.
The Yahoo thing, that was kind of
their VC.
A personal deal in the beginning.
Well, but if you remember, the whole process for the investment in Alibaba was they wanted to combine the Yahoo assets with the Yahoo assets in China because they knew that they couldn't operate their tech business in China. It had to be different. And so who better to lead that business than Jack Ma? So they found an entrepreneur and said, here, here's a bunch of money, go make a successful
Go run
version.
Yahoo.
But is Yahoo China more successful today than at the time of transaction?
Well, what is Yahoo China? Yahoo China is,
The search business.
it was 40% of Alibaba, right? At one point. So it was extremely successful, right?
No, Yahoo China disappeared.
But no, the point is though,
Business.
the point is, they had no, I mean, like, the point, yeah, this is an interesting argument here, right? The point is, they had the wrong business in China. They didn't know how to run a Chinese business. So what better to do than find an entrepreneur, find an entrepreneur to run my operations for me in China. And here's a time, whatever the number was, $4 billion to do it. So from a perspective is they opened up an operation in China by investing in Alibaba.
Yeah, maybe that was the right strategy, right? I mean, eBay had a strategy in China. Yahoo had a strategy in China. One was investing, right? And the other was to try to compete head-on with each net. And look who, I think it's very clear who was the winner in that.
And that's the big problem. People perceive that isn't their own strategy. Oh, they just got lucky. Well, no, they didn't get lucky. They were very, very smart.
It's like his direct investing is M&A's strategy.
And look what Yahoo's doing. I mean, Alibaba, Tencent, all the bats, they're doing the same thing in the U.S. right now. They're just investing in companies, trying to figure out how to get into China. They're softening the beachheads in a sense. So there are models where it works. One of the things I try to do with one of our big companies here, public, multi-billion-dollar public company, to go into China, you need a partner. You need a partner, and you got to give them control.
That's a big
You know how far that went? You know how far that went in the board meeting?
Yeah.
Well, is it going to be called X company? It's got to be called X company. We need our brand. We need our ego stroked. So there's a lot of stuff that happens that makes it really, really difficult for U.S. companies to go into China.
Yeah, I think it's an interesting question too. When you think about, we're all VCs, right? So I think the first question, you'll ask is at what price, right? So at what valuation, would I invest in a U.S. tech company that doesn't have a China strategy? Well, what's its valuation, right? If it's a $1 billion company that is still quite early, if they want $1 billion opportunities, then I wouldn't invest if they don't have a good China strategy or a good Asia strategy. Let's put it more broadly. And it's certainly relevant these days, where a lot of companies want billions or tens of billions of dollars valuation, because implied within that is that they're going abroad and they're capitalizing on this opportunity in Asia and emerging markets.
Yeah. Do you think the Chinese companies are going to be successful here in the U.S. markets? The Chinese tech companies that are coming in and acquiring and investing? Is that an innovation strategy? I mean, we talked a little bit about whether M&A is an innovation strategy. Are these companies got to get ahead because they're like Ren is in this too? We've made a lot of investments in.
Maybe tying the two questions together, one reason we think it's important to have a China or Asia strategy is because if you don't, the consequences of that are very dire. In this world where they have the talent, the cash, and the innovation.
So you're going to just be left behind if you don't have an Asia strategy.
Right, because let's say you come up with something really interesting here. Between the rocket internets of the world and Asia, it's very likely to be copied and improved upon. And with the resources that Asian companies have now, being able to come back to the US, so it's a real, I don't want to say threat, but it is a risk for any startup here. And I'm in the consumer internet world. I don't do hardware, I don't do SaaS. These are very capital efficient businesses that I invest in. So, that's the world I live in. And I think that's a very real kind of reality for these companies.
But it is very risky still and very challenging for U.S. companies to succeed in these markets, and particularly, I think, in China.
That's right. So to Hany's point, I think it's whether you are going to partner, build, or acquire, you need something to essentially cover that part of the world, because the downfield consequences are either going to be negative to your home market, or you've just left a lot of upside on the table by not making that step to acquiring a partner or build it over there.
A lot of good points here, and thank you for being so attentive. And in the interest of time, we've got to wrap this up. But just please stay around, because we're going to get first a photo op with the VC Dealmaker panel. So, Jonathan, can you just do a quick photo for us, please? Should we stand,
You guys
or
can
what?
kind of
Should we
scoot
stand or get together? And we're going to do the door prize, so don't go away. The door prize is coming, and there's several door prizes, so don't go away, please. Just be patient. Be patient for 1 minute, please.
Yeah, there you go.
Okay.